Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey traders, checking in. We had a strong start to the morning with gap ups, big gap ups on Apple, Tesla. We had Amazon with all-time highs, Google, XLV, the healthcare sector, came close but ended up rejecting. And from the open, we saw profit taking in the tech sector and in our high flyer names. And we saw rotation into the financial sector, cruises, airliners, and our laggard sectors. It's very similar to what we saw attempt to take place on Wednesday. It lasted for about 30 minutes in the morning, and then the laggard sector bulls completely fell flat on their face. Different story today. They held on to the gains. They closed strong. And now the question is, how many days do we see this laggard action take place? Looking at SPY, we can see the bulls are very pleased that tech sector consolidation is met with laggard sector strength, as SPY is in raging bull mode at all-time highs, closing strong. Anything above 335.22 is a daily high or low. Bulls keeping complete control. IWM seeing a bit of strength today. Again, laggard sectors and financial sector going up generally help IWM, which is trying to form a weekly high or low. Is this still a potential weekly bull flag? The answer is yes. Anything under 158.03 is a daily lower high. The bulls need to change the daily trend back in their favor for that weekly bull flag to be likely. QQQ. Still an all-time high close, even on a day that was marked by significant consolidation. And we ended with hourly equilibriums, and a ton of names formed these hourly equilibriums. Sell-off in the morning, lower high on the hourly, higher low into the end of the day. Nice save by the bulls. The bears were closing in on potentially confirming an hourly downtrend if we had broken the low of the day, but that did not happen. If you look at the high flyer names, OSTK, fairly similar, sideways hourly. Tesla, tightening hourly range. PTON, tightening sideways. Who else is a high flyer? ZM, hourly lower high set on the bounce. Sell off in the morning. And there's a bunch more names than that, but that's generally what we saw. TDOC is another one. DOCU, tightening hourly ranges after morning dumps. Tech sector and high flyers pulling back hard in unison in the morning. Healthcare sector saw a little bit of weakness, and it will be notable if we break 105.13 and 104.15. Those are two little line in the sand levels, and if they break, the weekly consolidation will then start to be more significant than what we've seen in the last few months. This is worth paying attention to because, again, the healthcare sector hasn't really done anything over the last month. It's just choppy sideways, which has helped the bulls by just not hurting the bulls, essentially, letting the tech sector bulls do their thing. But keeping a close eye on it, because if we were to see a bit more weakness, then that would be notable for SPY, as it is the second largest holding sector-wise in the SPY ETF. So the financial sector, there's your big bull day. That's the biggest bull day we've seen in a couple weeks. The last attempt was here where we have this upper wick and weak close. Again, very different story. The bulls are attempting a weekly higher low on XLF and a weekly bull break if we can get back over 25.77. If we fail to break 25.77 and if volume drops off, we're going to look for an equilibrium to be the most likely scenario here and for a tightening range into September. Best case for bulls, solid volume comparable to today, solid green day, getting as close as possible to 25.77 resistance. Bears want to top fish that resistance level. They want the bulls to get nice and extended, get close to that level, up to 25.40, 25.50, and then see bull volume disappear, set the lower high, make a bear entry, put your stop over 25.77, and then look for that daily lower high to be set. Haven't looked at Geo, private prison, in a while. Let's see if it had a big green day, and it did. I've been avoiding shorting Geo because it looks like a falling wedge on the weekly time frame. And there's a base of support down at $10. So I'm just in observation mode there. Always interested in shorting it, but patiently waiting. Biotech sector, notable weakness. Close down at the low. Bear volume. And 108.19 and 107.69 are in play tomorrow. Weekly lower high and lower low. I take that back. Weekly equilibrium, daily equilibrium. If we break 107.69, we zoom out to the weekly, and then we can call it a little weekly lower high and lower low. The momentum flipped as soon as Trump signed that executive order and as soon as drug prices got a little bit more real in terms of headline news and bearish implications to the biotech sector profits. It completely sucked away momentum, and it now has XBI as one of the weaker sectors over the last month plus. And now the question is, are the bears going to drive it home by breaking these two little resistance levels? There will be a potential bottom fishing play off of those levels tomorrow, but with the hourly oversold bounce that we saw today off of those levels, very weak. Have to be cautious and keep a tight stop. But if that support holds, we do remain in the daily equilibrium. So that support is something to be watching first thing. SMH, all-time high test, failed to break it today, but bulls still complete control. We would have to fail that all-time high and break 168.23 for that to change. And the VIX. So the VIX is pretty much for almost 2 weeks trading within the range of 1 day here, back on August 11th. So we have the high and the low on that day, failed to break resistance, failed to break 24.90, and now we're looking down at 21 and 20.30 as two support levels, pretty much just a tightening range within that one candles range. Leveling out a little bit, worth paying attention to, and again, didn't close at the low, SPY closed at the high. Not a bad time for hedging. Using the volatility index. The dollar. So the dollar is keeping its daily bounce going. Daily inside bar today, but we haven't topped out yet. The 4-hour uptrend is our guide. When we lose the 4-hour uptrend, our daily lower high will be set. And again, whether it's metals or crypto or the S&P 500, we're watching the dollar very close to see if a weekly oversold bounce can take place. And the bulls need to break $94 for that to happen. Gold is a little bit unclear. Just with a fake out, the bulls changed the 4-hour trend and attempted this daily bounce and then closed very weak. I like silver clarity better with the high, low, lower high, and we are scouting a daily higher low compared to 23.44, and it's just nice and clear. For gold, that little upper wick may throw some people off. I'm just going to be viewing this as, again, the same thing. Just a tightening range that, technically speaking, it did set the daily higher low and saw no follow through, but using my discretion as a technical analyst, I'm just going to be viewing it still looking for a higher low compared to 1862 as far as what clarity is for me and what silver is doing and what the dollar is doing. I find that to be the best viewpoint. So still all about 1862 support, and the bulls struggling to find a higher low as the dollar is not setting a lower high just yet. Silver, same thing, looking for a higher low compared to 23.44. Miners, higher open today, but closed at the low. So same thing. It looked like our daily bounce was getting underway. All profit taking from the gap up open, and we're looking for a higher low compared to 38.89 as a must-hold support level. Oil, we need to be watching things with the hurricanes heading to the Gulf Coast and the potential impacts there. But oil hasn't done anything in the last 2 weeks, really. We've had a couple of these dump and V-shaped bounces that have gotten no follow-through. We can be viewing this as a tightening 4-hour range where we've got a high, low, lower high, and we'll scout a higher low compared to 41.46. But overall, fairly range-bound on oil. What I'm watching for is, are we going to see a bear cross of these exponential moving averages, the 12 and 26 here? Because every time we've crossed, whether it's a bear cross or a bull cross, we've seen significant follow-through. So curious to see if we putter around here and those EMAs get closer and closer, and then all it will take is one little bear break, and they will cross bearish, and that will potentially be our monthly lower high, something we're still keeping an eye on. But not ready. I mean, I guess we could top fish bearish. If I were forced to trade oil, it would be a bearish top fish right now. Natural gas bulls keeping their full control. Nice, another daily bull flag confirmed. Holding the daily 12-period exponential support. 226. 5 is now our daily high or low, and beautiful continuation. The momentum shift continues to hold to favor the bulls, and we're just going to be looking up from here. 260 resistance, and 2693 is the next level. Weekly time frame getting a little bit extended. RSI straight from oversold to overbought, so that's keeping us a bit cautious on bull entries, but the daily higher lows have been beautiful. Congrats to the natural gas bulls. So I've been trading some volatile names, just pretty much day trading Tesla, GRWG. Looking for some swing entries and some USMJ plays. Already establishing some. Watching OSTK, which has had nice volatility as well. But basically, what I'm looking at for the rest of the week is how does this inverse relationship between QQQ and high flyers and financial sector and laggards continue to play out? And most importantly, does XLF give us a daily lower high and tightening range? Or can bulls surprise and break 2577? Here's the airliners doing the same thing. And here are the cruise liners. Nice, strong move. Cruise liners are a bit stronger. You can see RCL already broke to a higher high. NCLH just broke to a higher high today. CCL, the weakest of the three, is up close to that resistance level. And you look at the airliners, they're still a ways off. BA still a ways off. And XLF still a ways off. So a slight favorable bullish advantage for the cruise liners among the laggard sectors. Let's see what XLF can do. I'll be interested in a bearish play off of 2577 if we were to head right up towards it. Hope you have a good rest of your day, and we'll check back in tomorrow. Do good things. Sneak attack. So there's a lot of this aquatic plant, let's call it pond grass, growing underneath the surface here, and definitely starting to cloud out the pond a good bit. So previously, a couple days ago, I found myself neck deep in pond in my underwear and a t-shirt, ripping up all this stuff. But I got some tubes, some inflatable tubes. Got to play with that today, floating around and pulling it up. There's a bunch to get, it grows fast. But it was cool to see all the fish in the area that I cleared exploring their new space. Can't let it choke everything out.